How did the BMR 21 monthly asset allocation system perform during COVID and 2022? This is Bill Scheid from Applied Finance Research, and that's the question we're going to answer in this video. Recently, we had one of our Patreon community members ask about how the system performed during COVID and 2022. And it's a great question because during COVID, the market experienced the fastest 30% drop in the history of the S&P 500. And in 2022, the S&P had a maximum drawdown of around 25%, and it ended the year down 18%. And as if that weren't dismal enough, the aggregate bond index, as measured by the ETF AGG, ended up finishing 2022 down minus 13%. So it was a great question from our Patreon member. How did BMR 21 perform during both of these challenging market conditions? So what we have here is a backtest of BMR 21 as generated by ETFreplay.com. This goes from the last day of 2018 all the way through the most recent completed month at the time that I'm creating this video, which is August 29th, 2025. So we have both COVID and 2022, and then the years to follow. Now, this does not include slippage, commissions, taxes, or any type of fees, and it also doesn't include our sober stop, which is a volatility stop, or our optional short positions. We are going to take a look at those data in just a minute, but first let's jump into the performance of BMR 21 straight out of the box without any of the optional enhancements. So on our equity curve here, the green line is the equity curve for the BMR 21 backtest, and the blue line is the buy and hold return of the S&P 500. So here we see that the system returned 246.8%, while the S&P returned 185.5%. The system had a compounded annual growth rate for this period of 20.6%, while the S&P had a compounded annual growth rate of 17.1%. The maximum drawdowns for both the system and the S&P are very close. The system had a maximum drawdown of 34.3%, while the system had a drawdown of 33.7%. Now, as I said, these are the results without the sober and shorts. So as we know, that typically enhances system performance. Before we jump into that, let's just take a look at the annual performance for the system without sober and shorts. What's interesting to me is that in 2020, the year that COVID really hit the markets, the S&P returned 18.4%, while the system returned 87.6%. It was a huge year for the system. It did a fantastic job navigating the markets and ended up coming in 69.2% ahead of the S&P. This is the year that the system had its maximum drawdown of 34.3%, while the S&P had a drawdown of 33.7%. Now, our Patreon member did also ask about 2022, so I want to highlight that here. While the S&P lost 18.2%, the system gained 2.8%. So that is a 21% beat. And the maximum drawdown for the system was slightly smaller than the S&P, coming in at 22.4% versus 24.5%. We noticed that 2023 was an excellent year, 18.9%, and 2025 is also shaping up to be a good year. The other thing that pops out to me here is that the system made money every single one of the years during this backtest. Now, let's take a look at how the system performed when we add sober and shorts. So we have three columns here. This is the S&P return for the period. This is the system return without sober and shorts. These are the two sets of data we just looked at. And here we have the system return with the addition of sober and shorts. Now, these are optional. The sober is a type of volatility stop that tells us when we have hit adverse market conditions and it's safer to move to a defensive posture. And the short positions optionally give us the opportunity to capture some downside moves. So what we see here is when we add the sober and shorts, the total return jumps from 246.8 to 341.5. The compounded annual growth rate jumps from 20.6 to 25. The maximum drawdown is reduced quite a bit from 34.3 to 12.2, although I do want to highlight this asterisk here. For these two sets of data, the maximum drawdown is calculated on a daily basis. For this set of data, it's calculated on a month-end basis, so it's not exactly apples to apples. We do have to keep that in mind. Now, when we look at return to drawdown ratio, for me, this is a metric that I really like to look at as an individual investor, as an individual trader. It's essentially the total return divided by the maximum drawdown. And for me, this is a great simple metric that gives us a sense of, in a way, the risk to reward for a given system over a given time period. And I like this one because we all want the reward, none of us want the risk, and it gives us a way to compare systems and other approaches like buy and hold. So for example, we see here that the return to drawdown ratio for the S&P was 5.5. With the system without sober and shorts, it's 7.2. So we have almost a 50% increase in return to drawdown ratio. For me, that tells me there's a great value add for operating this system. When we add sober and shorts, the number jumps up to 28.0, which is a huge improvement. And again, to me, my takeaway is that there's a lot of value to adding the sober and the shorts to BMR 21. And of course, a lot of our past research in other timeframes and expanded timeframes also point to that same conclusion. There's a lot of value in the system itself, but also even more value when we add the sober and shorts. This is Bill Scheid from Applied Finance Research. Thank you very much for watching, and happy investing.